Hello, everyone. Good morning. Good morning, traders. Good morning, everyone. Thank you for joining us again for another exciting morning market review. These are MMR. We do this every trading day, Monday through Fridays. Actually, a one solid hour of market analysis. Try to give you tips and tricks, previews and reviews, how you can navigate the market profitably, guys. So my name is Emmanuel Otogu. The market will be with you guys. So we're starting immediately, but let's do a little sound check first. Sound check, sound check. Some of us are joining us directly on this Zoom. Some of us are joining through YouTube, right? And we're also recording this live on YouTube so that if you miss any of the session, you can actually go back and watch it on our YouTube page, Rally Trade on YouTube, right? So guys, little sound check. Let me know if you can hear me. I can hear myself, but let me know if you can hear me, okay? So get to the chat room. Let me know if you can hear me, guys. Okay, beautiful. Thank you very much, Salihu. So Salihu, where are you joining us from? Thank you very much, Esther Oladele. Please let me know where you're joining us from, okay? Mr. Kalu, thank you very much. Oh, Salihu from Kwara. Okay, that's fine. All the way from Kwara. I'm sure you know I am in Port Harcourt. Mr. Esther from Osun State. Okay, beautiful. Okay, Ikorodu. And raining nice. Raining there in Ikorodu. Okay, Osogbo. Okay. Okay, beautiful. Phineas, I can see you. You're from PH. Okay, beautiful, beautiful. So, please, the year is coming to an end. This is the last month of the year. I want to believe trading has been good to you. Trading has been good to you. So we have a lot of resources on our rally, on our YouTube channel, right? So if you are still struggling, like to understand the very basis of trading, can you can get to that YouTube channel, just type Rally Trade on YouTube. There is a lot of resources there, okay? There's a lot of resources, okay? So also at the end of this meeting, I'm going to drop my phone number so that you can reach me directly. Uh, so there are some videos that can equally direct you to watch, okay? To refine your trading, to make your trading well, so that this year can end up as a good year for you financially. Uh, okay? So once again, guys, this is our morning market review. We call it MMR. We do this Monday through Friday, every trading day, one solid hour of market analysis, where we try to look at what the market is doing, what the market will do, what the market have done, tips and tricks, how you can be able to navigate the market profitably. Trading success, profitable trading is about net profit. By net profit, I mean at the end of the day, you should be in profit. That's what we call profitable trading. Okay. So by net, I mean if you add all your stop losses and all your take profits, right? It should be giving you profit. That's what we call net profit. So net profit in trading is actually stop losses plus take profits. Uh-huh. Somebody will say, but Emmanuel, why are you adding stop losses now? Now, stop losses is part of the game. The name of the game is called P&L, okay? So that means from the beginning, we believe we will not be right 100% of the time, but we know that we make profit, we draw money. So guys, let me share my screen. Let's do a little fundamental. Let's look at what the fundamentals are saying, right? Before we now switch over to the chart. The chart. So let me share my screen real quick, guys. Uh, let me share my screen. So guys, I've been able to share my screen. I am on forexfactory.com. So this is what every profitable trader will do, right? They will always check for fundamentals, right? Because fundamentals are the main drivers of the market. In rally trade, we normally say we drive the market, okay? So the main thing that drives the market is fundamentals, right? So fundamentals drive the market, then technicals follow through with patterns, chart patterns, or chart structure, right? So, but then you are not to ignore the fundamentals, right? So the fundamentals are macroeconomic indicators across various economies of the world, which currencies we do trade, which currencies we do trade, okay? And all of these macroeconomic indicators affect commodities, affect stocks, stock indices, US 100, US 100, the one we call NASDAQ, National Association of Security Dealers Automated Quoting System. It also affects US 500, US 500, what we call S&P, Standard & Poor, also affect US 2000. Now, it also affects US 30, what we call Dow. So I believe all of these things I'm calling, you actually know them and you are equally trading them. Okay, so now it affects, those are indices. It also affects individual stocks. It also affects commodities like gold, oil, silver, and the rest. So it's good for you to be armed with fundamentals data, right? Or for you to know, even know when these fundamentals will affect the markets. And thank God for AI right now. AI is even making the job very easy for us because you can just even screenshot any fundamentals and drop it inside maybe ChatGPT or any other AI. It will just explain it to you and tell you when best to trade, how to position yourself. Man, this is the best time to be alive. I'm telling you, best time to be alive. So guys, so today is Thursday, 11 December, blessed day of the Lord. So I believe you can see my screen, right? So you can see my screen. So this is forexparty.com. So if you're joining us for the first time, to get to this website, you just go to your browser and you do www.forexfactory.com. It opens up to this place, okay? It takes you to the current news of the day. And of course, it's something we do. It's a custom here, right? We do this every day, every time. So most of us are very familiar with this. Date of the news, time of the day, the news will be released. And actually, this is our Nigerian time, okay? Local time, I mean. So this is the currency the news will affect. So that tells you where to focus. And this is the impact. Impact, very important. Impact is volatility. So you usually want to focus on the high volatility and perhaps the medium volatility. So we have high volatility, we have medium volatility, okay? So high volatility are the red folder news, red folder. So guys, this is high volatility, 1:30 a.m. already passed, Australian dollar, right? That's the Asian time, right? So when the New Yorkers are sleeping, right? When we in Nigeria we are sleeping, that is when they release their news, okay? So because they are in Asia there, okay? So we have 9:30. So by 9:30, we are expecting this other high volatility news, this particular one. I'm sure you can see it. So this one will affect the CHF, right? So this one will affect CHF. So if you have a trade already running on CHF, just know that by 9:30 we'll be having some kind of move. So it's actually the Swiss National Bank monetary policy assessment and Swiss National Bank policy rates. Of course, that is their rate statement, right? That is their rate statement. So this is actually their interest rates. Okay, so for today, the Swiss National Bank, they will be changing up, either holding, increasing, or cutting down their rates. So it all depends on what it will be by the end of 9:30, right? So by 9:30, we'll be expecting, so over here is the data of the news, right? Data. Now, not all the news comes out with data, as you can see. Not all comes out with data. Some of them are without data. So look at these two red folder news, red impact news, high impact news. So you can see that the assessment, policy assessment is actually a speech, right? Right? No data. But then the Swiss National Bank, their interest rate was 0.0%, and it is forecast to remain the same. Maybe the economy is looking good, right? That is why there is no need to adjust or increase the interest rates. So that means the economy is already looking good. So whenever the forecast uh, number is actually forecasted to be the same thing with the previous, it means perhaps everything is already looking good at home there in Swiss, okay, in Switzerland. So it all depends on what the actual will not be. Okay, so the actual may most likely look like the forecast, right? Okay, because this forecast is no random number, right? It's actually gotten from all of the other indicators like inflation in Switzerland, uh, retail sales, and other policy out there in Switzerland. Okay. Then of course we have by 10. So that it simply means from 9:30 to 10, 30 minutes after, we should be expecting a lot of rocking and moving around Swiss franc because we have a Swiss National Bank, Swiss National Bank press conference. So press conference perhaps to actually explain what has happened, right? What has happened, or how the rate that was given by 9:30 is going to affect the economy, or why that particular number came out the way it is, okay? So you should be expecting movement between 9:30 and of course 10 a.m. this morning. I know this our analysis runs from 8 a.m. to 9 a.m. So when this will be happening, we will not be having this analysis. That simply means you have to stick close to your chart, right? Stick close to the market and watch to see the direction the direction the market will go. Okay, stick close so that you can see the direction the market will go. Okay, so just like I've explained, the the previous number is zero point 0.0. The forecast is also 0.0. So for forecast of 0.0, it simply means they have already forecasted that following whatever is happening in the economy, there will not be need to increase the rates. But that depends on what the actual will eventually look like, right? But the forecast is already looking good for CHF, right? So it means the economy at home there is already looking good. Okay. Okay. Then we have tentative, right? BOE, Bank of England, Bank of England. Governor Bailey speaks. Okay. Now this one is actually a medium impact news. But it is the governor of the central bank there in Bank of England that is speaking. So he's a very important person. So his speech are usually scrutinized heavily by every aspect by traders, right? To see whether it's going to drop clues on interest rate or what they intend to do in the near future concerning rates. Okay. So that is why anytime he's engaged in any public fora, you'll be expecting his speech, the content of his speech, to be highly anticipated to move the market. Okay, be highly anticipated to move the market. So that's a speech. That's a speech. So we're not expecting any number here, right? Because it's a speech, and it's actually tentative, right? So therefore they're not giving any time. So it simply means throughout the whole day, I mean today, the time can be any time of the day. Okay, that simply means we have to look out for the pounds also. The pounds also. Then now, actually, by 11 a.m., we're having BOE again. Governor Bailey speaks again. Okay. Now, just twice, as you can see, but this one has time. 11 a.m. Okay. There's a time for it. Now, it simply means this one may come before 11 a.m. So that means he has two engagements for today, maybe in two different locations. So we'll be expecting the pounds, right? To see whether the pounds will lose some strength today because the pounds has been really gaining a lot of strength lately. Then by 2:30 p.m., just like we always have weekly unemployment claims, unemployment claims, unemployment claims. So in the US, they normally have this news that is released weekly, unemployment claims. So they are those that are filing for unemployment benefits, keying up for unemployment benefits, benefit for not being employed. That means if you're not being employed, you have some benefits, not advantage. Advantage is different from benefits. Maybe some stipends to take care of yourself, right? To buy maybe soap and the rest, right? Just some stipends, such that you will be good while you're unemployed until you're finally fully employed, right? Until you're finally fully employed. I wish you have such thing in Nigeria, right? Where if some persons are unemployed, they can be given some stipends, right? Until they are not fully employed, then of course the stipends will stop because they are not fully engaged. So guys, I think the number there is actually 191. That means 191,000. The previous number, right? Those that are 500 unemployment benefits are 191,000 persons the previous month. Now it is forecasted to be 220. That means an increase. So that means the number must have increased. So, but then it depends on what the forecast will look like, guys. It depends on what the forecast will look like. So it simply means for this particular one, if the number is higher, it simply means there are more persons filing for unemployment benefit. That alone can weaken the currency, okay? Because it doesn't tell you about the economy. That's another way of looking at unemployment rates, right? More persons are filing for unemployment benefits. Tells you about the economy, right? Okay. So guys, just 1 minute, please. All right, so guys, I think that's all for today, Thursday, December 11th, right? So that simply means you have to look out for this news, right? 10 a.m., 10 a.m., right? No, 9:30 actually, 9:30 to 10 a.m. So you may want to trade the pound, the Switzerland, right? Switzerland currency, Swiss franc. So one of the ways you can trade it is to be on a lower time frame, right? So put your chart on a lower time frame, maybe as low as 5 minutes time frame, right? If you want to say, you can even use 1 minute time frame, right? Uh-huh. Put your chart on that time frame, and of course, and then you should be on one click trading. You know what one click trading is, right? If you don't know, you can ask me, I will explain. One click trading means you just click you just click either a buy or sell, and the trade is executed immediately without even prompting or bringing up the trade dialog box. Okay, so in that way, you are actually going to be trading in a very, very fast way, right? Because the market will move very fast. So I think that's all for this. So let me switch over to my chart where we can now start looking at individual currency pairs and analyzing them on the chart. So guys, if you have some trade already running for you, going in your direction or not going in your direction, so please, you may want to drop them for us so that we can look at them together, right? So that means you have already taken some trade. However, if you are not taking any trade and you have some choice instruments, some beautiful instrument that you always like to trade, because trading success is about focusing on a few instruments and becoming a master of them. Now, just like that saying goes, Jack of all is actually a master of none. So, guys, you may want to focus on maybe a few. A few can be maybe 5 instruments, right? Five is okay. Maybe 3 or maybe 7, but just a few that you can actually follow them through, then of course you'll be good, okay? So if you're asking us to analyze any instrument, you want to tell us why you are asking us to analyze that instrument, right? Hey, I have a trade on the USD card, and I place that trade is on profit of 35,000 naira or even 250,000 naira. Should I hold the trade or should I close it? hey, I have a trade on gold, and that trade is on minus 15,000 naira. My heart is shaking. Boom, 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 boom. Should I hold it or should I close? Okay, guys, you understand that, right? Beautiful. So you can as well tell us your entry point, right? By the time you say, hey, I entered at 1.1351, I already know where you entered from. I'll know whether that piece is support or a resistance. So all of those information will help so that we can make money together and make this year a beautiful year, guys. The year has not actually come to an end, right? Because we still have a lot of trading days, guys. You can still make a whole lot of money trading, right? So you just need to maybe fund your account bigger, so such that this period your lot size can maybe increase, or even the instrument you trade. So if you have been trading Euro USD, right? If you fund a bigger account, you can now even jump towards trading silver, gold, US 100, US 30, D40, and all of that stuff. So let me share my screen so that we can do some things. Okay. So guys, I've been able to share my screen. Check if you can see my screen. I've been able to share my screen. So just type chat if you can see my screen. Chat if you can see my screen. Okay. So just like we always do, the kind of analysis here is for market structure analysis. So that means we are not we are trading what we see on the chart rather than what we anticipate, right? So market structure analysis is trading what you see on the chart rather than what you anticipate. What you anticipate is good, right? It can win, it can give you a win maybe 15% of the time, right? And when you win 50% of the time, that's not a true win, guys. But trading what you see on the chart can give you a win up to minimum 50% of the time. That may can give you between 50 to 65% of the time, right? When you win above 50%, 65%, even 70%, that's a win. That's a win in trading, guys. That's a win. So trading what is on the chart is the first thing you want to do is you want to look at the chart from the H4 time frame. That's if you are actually uh, a that's if you're actually a day trader. Okay, so by switching over to 15 minutes time frame, simply means you want to consider what the swing traders are saying, because the swing traders are your bigger money. Okay, so guys, some of you that you were with us, right, the last time, that means the last Thursday, where when we did this analysis, you will notice that I think we said this market Euro USD is on an upward trend. I'm sure you can still remember, right? Okay. And we said the market has broken. We said the market has broken a high here, right? So, and if the market have taken out this high, we call that a break of structure. Some of you can still remember, right? And then we drew this Fibonacci, right? And after that, you notice that the market actually retraced. You notice that the market actually retraced to where? Just a little bit below 61.8, right? As you can see, market retraced to 61.8. Then from there, it got enough momentum to push higher. Therefore, this high became the high to beat. And guess what? The market has actually taken out that high, right? Beautiful, guys. So that means, we said anytime the market have traded above a previous high, we call that a break of structure. Break of structure is actually a sign of momentum. Momentum to which direction? It depends on the particular direction the market broke the structure. So if it's a high it broke, that's a momentum shift to the upside. So break of structure equals momentum shift to the upside. Okay, so that means that momentum shift to the upside is invariably the definition of the kind of trend you're looking at, right? So you already know the trend. You already know the trend. You already know the trend. That's upward trend, guys. Of course, if there's a break of structure to the downside, of course, you already know the trend. Okay, okay, let me pause you guys a little bit. Get to the comment section. A break of structure to the upside, what does it mean? Are we buying or we are selling? Break of structure to the downside. Are we buying or we are selling? Uh, BOS, break of structure upside. What does it mean? Okay. BOS downside. What does it mean? So the break of structure to the upside is actually that alone tells you the parent trend. Thank you very much. I can see your responses. Beautiful, beautiful. So it also so it tells you the trend, and if you can know the trend direction, it simply means even if you place a trade and that trade is against you, but the trend is still upward trend, guys. That is where you cannot exercise patience. That is where hope cannot come in. No hope making not ashamed. Actually, the hope will not make you will not sell you out to shame because you are trading in the direction of the market, so you can exercise some hope. So I said you should start from H4 time frame, right? But if you also look at H1 time frame, the difference will not be much. Okay, so it is not actually cast on the rock that you must start from H4 time frame because 4 of H1 makes up 1D1. Sorry, 6 of H4. 6 of H4 makes up 1D1. Okay, so the difference is not much, just 6. So that's for endurance. Endurance, that's for you. So all of us will understand this break of social. So it simply means everybody here can tell that this trend is upward trend, right? So okay, beautiful. So if you can tell it's an all upward trend, it simply means you want to look out for opportunities to do what? To buy or to sell. Opportunities to buy. But wait a minute, the market has broken structure, right? So since the market has broken structure, any other movement to the upside is called an extension. An extension is actually the market trading to the upside at a premium price. So that means not everybody is interested in buying again, right? So once the market have broken a structure, hold on. Once the market have broken this structure, right? So any further movement upward from where it broke the structure is actually being traded at a premium price. So that means you are actually trading at a premium price. Let me put it this way: you're actually buying at the premium price. So that means in any time from now, the market will need or seek a retracement, right? So it will seek to retrace to the downside, right? It will seek to retrace to the downside. So just like what happened here is retrace to the downside. So the market may seek a retracement to the downside. So that is where your Fibonacci comes into tell, hey, how far would the retracement go if it's retracing to the downside? Okay. Okay, now that we have gotten all of that explanation on the H4 time frame, H4 time frame is our parent trend. So we will now dive lower to 15 minutes time frame, right? So 15 minutes time frame will help us to see more detail. Which kind of detail are you talking about, Emmanuel? Details I mean is more local support, local resistance, more areas where I can precisely enter my trade. So those are the details, details, details. Let me give you an example. This is actually a detail. Let me show you this one. Remember this thing we do earlier, okay? So you can see the market push up to this side and retrace a little bit to the downside, right? So if you watch it retrace, it touched my 21 period moving average and of course it bounced off, right? So by detail, I mean you notice the market. So this place it bounced off. Let me just draw one small something there and extend to the future. So you notice the market actually move down from there to this same point again, uh-oh, to this same point again and found a support. So that is only possible since we are on a 15 minutes time frame detail. So the reason why you analyze on a higher time frame and then dive lower to a lower time frame is for detail. Detail. Remember, in the multitude of counsel, you get safety. What is counsel information? That means the more information you have, the better your trading decision will be. So that more information comes from you looking at it from a lower time frame. So a lower time frame gives you more information about the market, more information about the market, more information about the market. This, this your okay, guys. So that means for what we are looking at, the market actually found a support right here. So that means this is where a buy would have come in. So a buy coming in at this point simply means the market would have given you somewhere around man, that's 15 pips, so right? But 15 pips, $1 per pip, $15 manageable, right? That's about 20 something thousand naira, right? Now, but $10 per pip, that's about $150. Man, that's about 250,000 naira, guys. Now, that depends on your lot size anyway, okay? That depends on your lot size. So that means this market is actually a buy market, right? But now this analysis is just this morning, right? But during the day, a lot of things might change. So it simply means if the market is able to break through this level, because remember we have done break of structure, right, on the H4 time frame. So if the market is able to break this level, then I'll be looking at to selling the retracement, right? Or selling the retracement. So another move I'll be expecting right here. So another kind of move I'll be expecting right here, I'll be expecting this market. Uh-oh, a lot of things. I'll be expecting this market to actually uh, trade above this known high, right? So if it trade above this known high to form a new high, then I will be expecting a retracement, right? So these are the two levels I'll be expecting a retracement. I'll be expecting a retracement when the market have destroyed this high, because for now this is the high to beat, high to beat. And you know, those highs to beats are actually liquidity trap, right? So the market might be looking forward to take out this liquidity maybe before doing the retracement. Don't forget, if the market should retrace, we are still on the upward trend, right? It's only a retracement. It's only a retracement. So that it simply means if you should catch the retracement, don't expect the market to run for days selling. No, it's only a retracement. So just catch your 20, 30, 40 pips and then you are out of the market. So these are the two areas I'll be looking forward to sell. So those sales are actually to sell the retracement. So this white area, I'm not selling inside this white area. I'm only, if I must trade, then I must buy, right? But these are the areas I must sell. If the market takes out this high to form a new high, so this area I would like to sell. Or the market take out this low, then of course I know they are started the retracement. Why? The market have done the break of structure. Guys, I don't know whether you guys are really following me. Traders, let me know if you're understanding what I'm doing. So all of this is let me know if you're understanding this type of analysis. This is what we call market structure analysis. The structures are the highs and the lows. So the analysis revolve and of course play around the highs and the lows. Okay. So guys, beautiful, beautiful, beautiful. So I think that's all for Euro USD, right? So that means we're not taking a trade right now, right? So we would have loved to buy on this support, but the market have left that support. So the market is already 50% of the entire range. So this is the range I'm looking at for. From this white area is the range, and the market is around half of it, half of it, half of it. Okay, the market is half of it. Okay, beautiful, beautiful. So, guys, the next thing we're going to do right now, let's look at GPUSD. Remember the custom, right? I'll do Euro USD, GPUSD. Then from there, I'll now fire through and start taking your own. Okay. So some of you will also remember this analysis, right? Beautiful analysis on the H4 time frame. The market is pointing upward, guys. The market is pointing upward. So, guys, remember we said the market is riding an upward trend, right? Of course, you can see an all upward trend. So if it's an upward trend, now remember you can buy, the best trade is to buy, but then when the market faces or when the market have broken structures to the upside, we're expecting retracement. Now, why expecting that retracement? It's possible you can sell because you are a day trader, you're a scalper, you want to take short trade. You can do that and make money, but then now see, the difference is when you are selling on an upward trend, you should know that you are trading the retracement. Don't feel relaxed and say, let me leave this trade to run for 5 days, 10 days. That is when the market will later wipe out your profits and turn into negative. Most people have this complaint. They will say, Emmanuel, I'm always having this challenge. I'm always taking small profits. So, but when I decide to leave the market to grow into bigger profit, the small profit that I was actually seeing now even reduced to zero. I'm going to hit my stop loss. It's simply now the solution to that, or the salvation to that, is actually now you have to define the market structure you are trading. Are you trading the extension? Are you trading the retracement? Are you trading the impulse? Which one are you trading? So if you are trading the retracement, by that I mean, if you are trading this leg, can you see this leg? Now, it simply means you don't expect the market to continue too long while you are selling. But if you are trading this other leg, this is the impulse leg, right? So even if there's a little retracement, the market will come back. So you should know that's the solution. I'm sure right now you have a solution, so your trades will get better, okay? Your trades will get better. So guys, this is upward trend, right? So let's see, have we broken structure? Let's check. Have we broken structure? Who can help us? Have we broken structure? Yes or no? Mm. Get to the comment section, please. Engage me, engage me. Have we broken structure? What is the structure? Now, this is the high. Let me even make it simple. This is the high, the last known high. So have we broken that high? Okay, let me check. I think you have said something. Yes. Okay. So let's see what that is true. So let's see what that is true. Mm. So this is the high. So this is the high. So the answer is technically we have not broken the structure, right? But if you want to look at as per price movement, we have tapped this liquidity. The market has tapped this liquidity. The market has tapped the liquidity. So if you're looking at, so I actually use the word technically because if you just look at the as per the week have traded above this high, right? The week have traded above this high. So if you're thinking, hey, the market have broken this resistance because there's a resistance here. No, that's only tapped it. That's only tapped it. So, but as per the liquidity, the market have tapped the liquidity, right? The market have because if there is any trade above here, by trade I mean if there is a stop loss, the market have touched the stop loss. If there's a take profit, the market has actually tapped it. If there is a buy stop, the market have tapped it. If there is a sell limit, the market have tapped it. So those are the liquidity I'm talking about. So all of these things I mentioned are called market liquidity because they are the possible trades that will rest here. So those trade are the money on the market are trade, are positions. So all of those position line here, the market have tapped them. Now, if this market continue going downward, now we can call this relatively equal highs. So I'll be expecting the market to trade well above this level with the body. So therefore, I'll be expecting more upward movement to the upside, right? More movement to the upside. So that alone will qualify this low to be a strong low. Hey, by the way, I'm actually seeing what we call an order block right here. But this order block has not been tested. So the market will need to come and test this order block, right? So by testing this order block, it may be after breaking, after fully trading above this high with body, right? So the body of the candle fully trading above this high and closing above this high, right? So right now the market have not closed above this high, right? It has not closed above this high. You know? Okay. So I'll be expecting a little retracement, right, to confirm it is actually an order block because an order block is formed by actually a down close candlestick, right? So this is actually a down close candlestick. By down close, I mean, okay, wait. Okay. I was pointing the wrong one. So this is actually a down close candlestick. By down close, I mean a bearish candlestick, right? So, and afterwards, a very fast displacement or extension, right? a very fast movement to either upside or downside, and the market will need to come back to test again. Okay, so guys, if the market is coming back to this area will be a good area to look for your buy opportunities, right? This area will be a good area to look for your buy opportunities. So just mark this area, guys. Most of the time, the analysis is usually like this, right? So the analysis is usually followed by a waiting signal, right? So you have to wait for the thing to happen, right? So why? Because this is the area with highest probability of entry that will give profit instead of gambling. Okay, you understand it now. So guys, this area is one area where we know buyers will exceed sellers, where we know demand will exceed supply. So guys, you understand it, right? Why? Because this area is actually an area of interest, right? This area is an area of interest. So guys, a little retracement inside this area, then I would like to continue buying, right? Now, even if we draw Fibonacci, you will see that that area will easily fall inside my 38.2% retracement, right? As you can see, it fell inside my 38.2. So which 38.2 is actually another strong level area where we know the market will most definitely want to reverse from. Okay, so that's the signal for you for GBP USD, guys. For GBP USD, what if the market breaks this level? Beautiful. You may want to enter a buy. Now that buy will be a high risk buy, right? Remember the last time we defined the different trades, right? You are either taking a high risk buy or a low risk buy, or a high risk sell or a low risk sell. It depends on whether you are buying at the premium price or you are buying at the discounted price. Now, after the market have broken this high, any other candlestick forming above this high, they are actually discount candlesticks, sorry, premium candlesticks, right? And if you're buying there, you can make profit, but that's actually at a premium price. Not everybody is interested in buying at that price. That's why it's a premium price. So if everybody is not interested, those that already bought earlier will be selling at that price. So it simply means you are buying where others are selling. Okay. So that is why in no time we'll be expecting a retracement. Guys, I think that's for Euro USD and GBP So beautiful, beautiful. I believe you understand those analyses. For the summary on GPUSD is that we are actually buying in this area. Okay. Now get to the comment section. Let me see the instrument you would like us to analyze. So let me see the instrument you would like us to analyze. Okay, somebody just mentioned gold. Okay. Oh, you guys like gold. Oh. I already have a trade of gold myself. Okay. So So guys, instrument gold. So I would like to look at a H4 time frame, right? You already know the custom, right? Don't deny me, you already know the custom. H4 time frame. So on the H4 time frame, what can we see? We are seeing excuse me. So we can do something like this, right? So this H4 time frame, each of these columns is actually activity for 1 week, 1 week. So we can do something like this and say, hey, this market is gold is giving us higher lows, right? And higher lows are actually characteristics of upward momentum, right? But the only challenge is that the market has not taken out this known high. So this high is a high to beat, right? So that means a lot of liquidity will be resting here. A lot of liquidity will be resting here. But if you look at the past few weeks, 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, a month, and 2 weeks, guys, the market has been building for us higher lows. And higher lows are characteristics that the market is trying to go higher, right? It simply means there is a momentum shift to the upside. The market is trading more of the upside than the downside, right? Okay, that's the information we get on the H4 time frame, right? Now let's zoom into the area. Remember we said earlier in the multitude of counsel, the multitude of information, you get more or you get better analysis, right? In the multitude of information, you get better analysis. Some of you can write it down, right? In the multitude or the more information you have on the chart, the better your analysis, right? But it's taken from the Bible. In the multitude of counsel, there is safety. There is safety. So that's actually wisdom to apply on the chart. So after the H4 time frame, you move over to a lower time frame to get more detail. But wait a minute. On this H4 time frame, let's look at the activity for this week alone, right? Let's look at the activity for this week alone. So for this week, the market opened here. So this is where the market opened. For this week, the market opened here. So this is the opening price for this week. So that means currently, right now, the market is actually trading above the opening, right? So, sir, if the market is trading above the opening, Mr. E. This is your comment. Okay. So if the market is trading above the opening, is that a buy bias or a sell bias? Who can help us? Right now, look at where the market is right now. It's trading above the weekly open. Is that a signal for a buy or a signal for a sell? Let's call it partial signal, right? Because that's not the only thing you need to make a trading decision. So let's go. Is that a signal for a partial signal? Forgive me. Is that a partial signal for a buy or a partial signal for you? Say, okay, Mr. S, is it okay? Esther, you guys are saying buy, buy, buy. Yeah, it favors more of the upside, right? Because wherever we see the market, it tells us where the power is, right? So the power is at the upside. The power is at the upside. Now, if you now look at the individual candlesticks, right? So you can see a very big candlestick right here, right? Very big one that engulfs all of these candlesticks. Now, if you do what we call candlestick maths, right? Candlestick mathematics. Even if you add all of these maths, all of the candlesticks together, this one has engulfed everything. There's a big momentum shift to the upside. So look at what I will do here. Look at this candlestick, So I will use my Fibonacci. I will draw Fibonacci on this candlestick alone. So guys, it is possible to draw your Fibonacci on a particular candlestick. One candlestick is very possible, right? It's very possible. So you can see that this particular, because this candlestick is very obvious, very big, then I am tempted to draw my Fibonacci on that candlestick, right? So you can see after that, the market retraces back to 50% of it, nearly touching 61.8 before moving up again. So the market has actually done a retracement on this candlestick, right? It has done a retracement on this candlestick, right? So from here, it is trying to go up again. So this is the high to beat. This is the high to beat. So from here, the market will most possibly take out this high to form a new high, okay? But guys, this is good, okay? This is good. See, there is a way you trade gold, okay? Once you see profit, make sure you protect your profit, right? With your stop loss. Because the guy is very, very volatile. You understand what I mean, right? So it can give you a whipsaw. It can give you a whipsaw. It can just sweep up and sweep down, clearing everywhere. That is why you will need maybe a large stop loss, very far from your entry, but it's only possible when you have a good capital size, okay? So guys, if you're trading gold, by the end of this program, you should be adding more money to your account, right? Emmanuel is telling you, you add more money, add more money. So if you want to do deposits, so you can reach out to me after this program. I'll drop my number at the end of this. You can reach out to me, you can reach out to your account officer, add more money, okay? Gold will make you rich this year. So guys, it's actually on the upside for me. So that's for H4 time. So let me drop to 15 minutes time frame. No, I'm not the one dropping. I'm dropping the chart. Okay? Me, I'm not dropping. I cannot go down. So I have dropped the chart to 15 minutes time frame, guys. So on 15 minutes time frame, you should be expecting us to see more detail, right? More detail. So let's remove some of these things that making our chart look clumsy, right? So the chart is a little bit free now, right? Okay. So guys, so the market, so if you watch carefully, look at what happened here. The market dropped heavily, right? Then it gave us a little push to the upside. Then it took out this low to form a new low. That's characteristics of a downward movement, is it not? Of course it is. But guess what? Now the market is trying to go up. Now this is the high to beat. This is the high to beat. Remember we said when you drop down to lower time frame, you get more details, right? This is the high to beat. So before you must enter a buy from what we saw on the H4 time frame, this high must be taken care of. That's what we call a change of character or a market structure shift. So there should be a shift. A shift is when we now have a new high that beats this previous high. Otherwise, this market will retrace further. Remember, I've already adjusted my stop loss to this level, right? So before you must buy, the market should beat this high. So there has to be a MSS, a break, a market structure shift. A market structure shift is the market now putting up a new high, higher than this previous high on the seemingly lower low, lower highs, as you can see, right? Or otherwise, you just wait, right? You just wait. So guys, that's for gold. So guys, this is the area where your buys can come. So if the market is able to trade above this high, then you can enter a buy. But if the market is not doing that, then you're not entering any buy. But then if you want to scalp the market, of course, you should drop down to a much lower time, maybe 1 or 15 minutes, and you can scalp the market. So, but this is area where you can do your intraday buy. Now the next one. So you can see for me, I have a buy, right? That's what I'm telling you to buy. I have a buy on gold, right? And that buy is not doing bad. Okay, so I'm expecting it to take out this high, right? Depending on the movement. But I've already protected the profit, as you can see. So guys, let's look at the next instrument you want us to analyze. Okay. Okay. So you say GBP, JPY, Mr. E, USD, JPY, Maxwell. So JPY, JPY. So GBP, JPY. That's my instrument. GBP, JPY is my instrument. See what this guy is doing. Ah, this guy have reached the heavens. Okay, so GPJPY is a very strong, is actually on a very strong upward trend, Mr. E, right? As you can see, a very strong upward trend. So I hope you're not selling here, right? I hope you're only buying. You're only buying. So even just anybody can place a buy here, right? So let's zoom into the area on the 15 minutes time frame. So one of the things you want to do is if the market is strongly going up, the best time to enter is after a liquidity sweep. So this is actually a liquidity sweep. Liquidity sweep is you have identified the trend first, it's upward trend. Then you move to a lower time frame. I'm trying to define what liquidity sweep is, so listen carefully. You have identified the trend, upward trend. You now switch over to a lower time frame to look for the market to trade below a low. Which low? That low, now there are several kind of low, right? There can be a weekly low, a daily low, an Asian low, right? So this low, so this is yesterday's low, which is also a strong low. The market did trade above this, trade below this low. So this simply means this is where the buys are supposed to come in from. The buy is supposed to come in here because we have already seen an upward trend. Don't forget. Now you can as well want to enter buy immediately. So guys, my direction is a buy, right? You already understand, but not just buying randomly anywhere. You have to know the best place to buy, right? Best place to buy. So that's for GBJPY. I'm sure you understand that simple analysis. The next one is USDJPY. Let me cover that for you. I think that's for Maxwell, right? Maxwell USDJPY. So please, if I if I fail to cover up your own instrument, don't worry. I'll cover it another day, right? But let me just cover as much as I can. So this is for USDJPY, guys. So the first thing we want to do is on the H4 time frame, we want to look at, hey, what is the parent trend here? What is the major move here, right? So we want to look at the H4 time frame. So you can see that the trend is strongly upward, but not just 100%, because for the past few weeks, we saw a very big downward push to the downside, right? Big move to the downside. We saw it here, right? Big, big push to the downside. We saw it here. Big movement to the downside, right? It does almost form a channel for us. It formed a channel. Then what? Guess what? We now have to break the channel. So the market have broken the channel, as you can see. So these two lines are called channel, right? So the market have broken the channel, and break of that channel is a resumption of the upward trend. I did that very well by giving us a very by destroying all of this liquidity here, right? So let's see all the liquidity it took out. So it took out this high, took out this high, took out this high, failed to take out this high, right? Okay, but for now, you can see the market is trying to form what we call uh, this is the very early stage of an upward trend, right? So currently, right now, the market is trading above the opening, which is a good sign, right? It's trading above the opening price. So this is the opening price of the day. So it's trading above the opening. So it's actually a good sign for a buy, too, right? It's actually a good sign for a buy. Your stop loss can be found below the opening price. So guys, I think let me draw the cutting here, right? Or should we do US 100? So Mr. E, you said, does it mean if there is break of structure on a smaller time frame, it's not as effective as in a higher time? The answer is yes. In trading generally, the higher you go on the time frame, the stronger or the more solid your claim is, or whatever you're looking at is, right? Because at the end of the day, the smaller time frame will actually cave into what the bigger one is doing, okay? You're only going lower to see more detail. So, Mr. Ekpemski, how are you now? uh, Mr. Ekpemski, you are saying your explanation on liquidity was not clear. So, the explanation I gave there is actually liquidities are actually trapped at the lows and highs of the market, and liquidity is money, right? So, I think I gave that explanation on GBP JPY, right? So, you have identified the trend to be an upward trend. You have identified the trend to be an upward trend like this. This is an upward trend, right? Then you want to now place a buy. And especially when the trend has been an upward trend for some time, as you can see, for first week, second week, third week, fourth week, fifth week, it has been going up. So if you want to buy, you have to be careful, because sometimes you can buy and the market can take out your stop loss. So you will have to go to a much lower time frame, maybe 15 minutes time frame, and look for a liquidity sweep. By liquidity sweep, I mean the market should be able to take out a low. That's the opposite now. Yeah, you want to buy, but the market should destroy a low first before you buy. And this is exactly what happened here. So that low can be any low, but especially a strong low. Strong lows are weekly low, weekly low, daily low, the lows of different session low, Asian low, and all of that. For example, this low is actually an Asian low. This is the Asian low of yesterday, and also a daily low. So that simply is both Asian low and of course daily low of yesterday. So the market actually traded below that low. So this is where actually to buy. So remember the H4 time frame is giving us buy signal, right? Buy signal. So why on this lower time frame you are looking at for reasons to buy? It's still a buy, right? Still a buy. So guys, thank you very much. Let me drop my number there so that if you want to reach out, you can do on WhatsApp, please, on WhatsApp. So 09026264507. So please call on WhatsApp, or maybe you can chat, right? Emmanuel. So guys, it is 9 o'clock past 9. Thank you very much, guys, for joining us again, right? Join us tomorrow again for another exciting section, and the market will be with you. Bye for now.